Hey guys, it's John with Gatehouse Properties, sitting here with my trusted lender, Chris Tamodakis. We've been working together pretty solid for about 4 years now. What we're going to do today is just get to know a little bit about mortgage and the mortgage process. How you doing today, Chris?
I'm doing great. Thank you for having me.
All right, man. So tell us why a buyer should come to a lender before starting the search process.
Well, from a lender standpoint, you definitely want to talk to us first, for the fact that if you go out looking at properties and you haven't gone over payments and your budget and everything with a lender and find out the rules and stuff that you have to qualify for, you may fall in love with the wrong property, and then you're going to call me at the very end and find out that maybe that payment's more than you anticipated. So I think the best thing to do is call me first, and I'll kind of give you a level of comfort on what that payment will look like, and then we'll set you free on what that payment translate to in a purchase price.
I've definitely found that to work best. We know what we're looking for. We're focused on the properties that do fit your needs, and then when we get the property, there's no surprises. Exactly. There's no hiccups during the road. So how do they go about? Tell us what a pre-approval letter is.
A pre-approval letter means that I've reviewed your income documentation, your asset documentation. I've reviewed your credit. And we feel satisfactory that you could qualify for this loan. So then we issue what they call a pre-approval letter. Now there's still some terms that could apply from the property that could affect the loan, but overall we think that you've satisfied your requirements as a buyer to be able to get a pre-approval letter. And basically it's to make the seller feel comfortable that you are qualified to buy this property.
Right, okay. So that covers my next question too. Are there any other documents besides the income and asset documents that need to?
No, income, asset, copies of driver's licenses, and that's basically the main thing is down payment and income requirements.
I was having this conversation just this morning about the pre-approval letter, and it's like, why do I need that before we go look at houses? And it's called house hunting. So put your little safari hat on. You see your perfect animal that you're going to shoot. Is it time to load the gun, or is it time to fire the bullet? It's house hunting.
Yeah.
You're going to need that pre-approval. Every offer now needs to be accompanied by a pre-approval letter. So if you're looking at houses and you're serious about buying, it's part of the offer. You need to have it and be ready to go.
Yeah.
How long is a pre-approval valid for?
If we run your credit, and that depends on several factors. If we run your credit, it's good for 90 days. So that's a pretty good time frame. We usually hold off on ordering the credit until we've kind of come to a comfort level on payment, income, and asset, and where the buyer's at as far as comfort zone or timing. As soon as I know that they're ready to get in the car with you, then at that point we issue the credit and the 90-day clock starts. But if they're saying we're going to wait 6 months or we're a little bit out, we won't run their credit immediately. We'll just have a consultation and kind of have a conversation about it.
Is that 90 days to close?
90 days to close.
Okay. What are the interest rates doing right now? I know there's been a little bit of conversation about it, and they've ticked up a little bit over time.
Yeah, interest rates have gone up. They're still very, very low historically. I think the stigma is everybody got used to these 3.5% interest rates, which we know we're not going to last forever. And now we're here, and interest rates are going up, and people need to realize that they are still really, really low historically. So even 6% is low. So if right now the average interest rate's 4.5% to 5%, depending on your credit score, your down payment, but that's still really, really low.
Interest rate's just one of the components of a home purchase anyway. You think of things like inflation. A higher interest rate is kind of indicative of a better performing economy, so your home should be appreciating at a higher level also. Not to mention if they do drop in the future, you have things available like a refinance, things like that. But I think it's important to know that they do go up and go down. Right now they're tending to go up. Now, so you're sitting around thinking, or somebody's sitting around thinking about buying a house, and they're renting, they really don't want to do it anymore, and they're worried about the down payment. Do they need 20%?
They do not. So that used to be a big stigma that we've kind of addressed over the years, is they can get in with as little as 3% down. Now what's actually coming to the marketplace is more 100% loan programs out there.
Really?
Yeah, there's actually down payment assistance programs where we will loan you the 3% for the down payment, and if you keep that loan for 3 years, we'll forgive the loan. So there's no need for...
That's new.
Yeah, it's new. So what it's going to come down to, John, is obviously the less you put down, the higher the payment will be.
Right.
So that could affect your borrowing ability.
Is there a dollar amount limit? Loan limits?
It depends. Right now in Orange County, you can get 100% financing up to $705,000 purchase price.
Wow.
Yeah.
All right, that's cool.
And so that it seems like it's pretty reasonable for buying power in Orange County right now still.
That's pretty neat stuff. It's an entry-level loan.
It's entry level, first-time home buyer.
Mm-hmm.
Yep. Mm-hmm.
Cool. That's good news. What tips in general do you have for like a first-time home buyer?
A tip in general would be to sit down the minute you have a good job and the minute you have money in the bank. And I think the best advice I could give you is to sit down with a lender, sit down with a realtor, and figure out a strategy to get some type of real estate in motion.
Okay.
I think everybody, in my opinion, should have at least one property working for them, and if they want to invest money in the stock market after that, that's their choice, but at least they got one asset that's going to appreciate. As we've known, go back 30 years, our parents bought these properties for $40,000, and now they're worth $1 million. So we're going to be saying the same thing in 30 years.
I know, it's hard to imagine.
It is hard to imagine, and I'm sure our parents went through the same exact thing. It was hard to imagine, but it's going to happen. Inflation has to happen.
Come across it all the time.
Yeah.
And they bought their house 30 years ago. They were making $1.25 an hour, or whatever it was, and they can't believe the prices now. That's about it. That's our entry level to mortgage lending in the real estate market. And if you have any questions or about the market, mortgage, or anything at all, always feel free to contact me. I'll talk to you soon.